if we get the trade war escalating this week towards the back end of the week? Dollar positive or dollar negative?
Well, of course, that's a very interesting dilemma in terms of how does the market trade this dynamic? Because, of course, the dispute is being triggered via the US. So, in a sense, you would argue that that would be a draining factor in terms of the dollar's sentiment. But also, of course, invariably, when you do see periods of uncertainty, then the liquidity of the dollar often plays positively, and you get a little bit of a bump. So, I think there's sort of countervailing forces here. But I suspect ultimately the US dollar would be under a little bit of pressure, and I think you will probably prefer to be looking at maybe euro, maybe yen, maybe Swiss franc, as opposed to holding dollars amidst these escalating trade tensions.
Gilles, how does Europe play this? Like it's sitting right in the middle. It doesn't have much tech, but nevertheless is going to be exposed to this one.
For Europe, it's probably, Europe is in the worst position right now, because if there's a trade war, Europe is going to be by far the biggest victim, in the sense among the biggest regions, very simply because 30% of our GDP comes from exports. If there's, for any reason, a proper slowdown in global trade, Europe will suffer. Another reason is that if the US continues to send protectionist noise, Europe is going to be seen as the one big region which is probably going to resist this temptation until the last moment. If you think strategically, for any emerging market producer right now, it may make sense to try to lock in strong market shares on the European markets right now to protect yourself against possibly an escalation of tariff hikes in the US. If that happens, you've got even more deflationary pressure onto Europe. In a nutshell, if this continues, you could get more inflationary pressure in the US and more deflationary pressure in Europe, which would not help, actually, the European Central Bank.